What's going on, guys? Welcome back to the channel. In today's video, I have a special guest with me, DB from Wealth Group. He's a market analyst, been working there for quite some time. He's big on the macro time frame. He's been really killing the stocks as well, and as you know, that's super relevant in today's day and age. So, without further ado, DB, introduce yourself, tell the people your strategy and how you came to, and what you've been doing lately.
Well, thanks for having me, Woods. Thank you for the introduction. If you don't know me, I'm DB. I'm a macro market analyst at Wealth Group. I look at stock markets as well as the crypto market. I look at macro trends and developments and try to have an understanding of the higher time frame direction of different financial markets with a specific focus on cryptocurrencies and as well as stock markets. So just to give an illustration on the work that we've been doing at Wealth Group in the last few weeks, through a higher time frame analysis on BTC and its weekly chart, we have been able to identify a local top at 126K. How we did that is by identifying a weekly bearish divergence within a monthly bearish divergence for BTC, a very similar setup to 2021 before we had a local / macro top for BTC. We don't know yet if that's going to be a macro top or not, but for now we have a local top. So the weekly bearish divergence led to BTC basically losing this diagonal trend line, which has been an uptrend for 3 years, basically the entire bull cycle. And then along the way, we had a market structure break when BTC closed below 100K, which was a very, very important macro level. After that weekly close, we basically accelerated down towards 80K, and now we're stuck below this area. There are different areas that need to be reclaimed for the trend to be improved or recovered. For instance, we have the weekly SMA simple moving average. We're stuck below it for the first time in 3 years. Apart from that, we have the weekly RSI that is stuck below the key macro support, which has been serving as support for BTC throughout the cycle. So any retest of this area at around 100K can be a bit higher, can be a bit lower. As of now, should be considered a bearish retest and potentially lower levels going into next year. We had a very similar situation in the last cycle. The macro was a bit different, but from a technical standpoint, very, very similar. BTC lost the simple moving average, gave a dead cat bounce, or basically a bearish retest, and then continued lower. So we will see if we are at an early stage of a new macro trend for BTC. If that's the case, we will be testing this new trend at 100K if given, and if this turns out to be a lower high on the weekly, you can always assume that we can get lower lows as well. So this is just to understand what we've been looking at, how we look at indexes, how we look at charts. Certainly we like to zoom out and have a higher time frame bias towards the market, and this helps us with our long-term investments and portfolios as well. Today I want to discuss a few things going into the FOMC meeting, which I think are very, very relevant. So basically, looking at DXY, the index that measures the strength of the dollar relative to different global fiat currencies, right? What we have here is basically an uptrend or a channel that it has been respecting since the financial crisis in 2008, 2009. What is very interesting about this channel is that whenever the dollar has retested these channel range lows, usually BTC has macro topped around that level, and when the dollar has reached these macro range highs, BTC has found a macro bottom. So BTC performs relatively good when the dollar is weak relative to other fiat currencies globally, and it performs poorly when the dollar shows strength or is in an uptrend. Now, the market expects that the Fed will cut interest rates by another 25 basis points, the third cut for this year after 75 basis points cuts in 2024. Cutting rates while stocks sit at all-time highs and inflation rises is seen as bullish for assets, as investors usually hedge against dollar devaluation, which has been declining in the past 3 years, but especially in recent weeks due to the Fed cutting rates again, which can be seen very well in this chart here. Especially since Jackson Hole, the Fed has emphasized protecting the labor market over controlling inflation, which markets have interpreted as a green light for risk assets. And that is because a Fed stimulus to the market further increases inflation and the incentive to hedge against it. Now, this FOMC meeting on Wednesday is important because markets want clarity about 2026 rate cut plans. We know that we will get a rate cut on Wednesday. That is not new information. What the market wants to know is what is going to happen in 2026. So if the Fed remains hawkish, suggesting that further rate cuts might be problematic, this would provide a case for the dollar, which could help it reclaim this very, very important 100 area, which has been serving as resistance in the past few weeks, opening the path towards 104, 105. And this would be problematic for asset markets as investors would hedge back into the dollar. We have seen that every time the dollar has rejected from this area, we have BTC recovering nicely. The last time it rejected from the zone, we can zoom in a bit. We basically had BTC at 80K, and throughout this decline, basically BTC recovered from 80 to 93, 94K, which shows how important this level is going to be for BTC and speculative markets in general. So if the Fed remains dovish and hints towards more rate cuts next year, the macro environment for asset markets remains positive, and as there's no reason to believe that the dollar could rise significantly to risk speculative assets.
Yeah, and I think that's super important to realize that how relevant this is, and it's a good point that you touched up on that it's nothing new. This is not new news. We're just waiting to see what further progresses next year, and I appreciate all that in-depth analysis. I'm sure a lot of people are going to appreciate that as well. It goes in depth, but it's important because people lose track of the higher time frame vision of things. When you realize what's going on in the higher time frame, you could then adjust in the lower time frame and begin to really plan out things the right way. And this is why I had you on today. I think that this macro analysis goes a long way, and I think combining these type of confluences and realizing that there's other things going on in the market is important.
So another important index is the volatility index for the S&P 500, the VIX, right? As investors have been hedging against rate cuts almost all year, stock markets are basically at record highs. And this means that the VIX is dropping towards zones where investors become complacent. So the VIX is calm. There's not enough volatility in stock markets because everybody's comfortable buying, right? Usually when the VIX is dropping towards these zones, it is a profit-taking zone, right? You want to be buying when there's a lot of volatility in the VIX, when you see these spikes on the index, as we have seen in April. It's an outlying event, right? It doesn't happen every day, but you also see some smaller spikes. And usually when these happens, you get these 3, 4, 5% drops in stock markets, and that is important for cryptocurrencies as well, because I've noticed that when the VIX spikes, usually it offers good buying opportunities for BTC as well, as BTC ETF outflows increase, while when the VIX is falling and investors start feeling complacent and more comfortable, the ETF inflows basically increase. And historically, it has been more profitable to buy BTC during ETF outflows, right? During stages where retail investors actually dump their BTC. And so when the VIX is basically high and not during calm periods. So until the FOMC meeting is done, I think the VIX zone is not ideal for adding midterm exposure to stocks or BTC because it is at a profit-taking area. And now there's the risk that the FOMC meeting turns into a sell the news event because the market has been expecting a rate cut for a few weeks and months now, right? And if the market doesn't like what it hears regarding future plans for 2026, we could actually see a pretty good reaction from the VIX here, leading to one more of these spikes, right? And that could lead to a 3, 4, 5% drop in the S&P 500, and that will more negatively influence BTC. And the reason why that is the case is another index that we have been discussing in Wealth Group extensively, which is BTC to S&P 500. So this measures the strength of BTC relative to the SPX index. And this is one of the key indexes that we have used to try and predict that cryptocurrencies will be lagging against other financial markets, in this case, the S&P 500. So all these developments that we just cover are particularly important to BTC as it has been showing weakness against stock markets, visible in this BTC to SPX ratio, which remains in a macro downtrend after losing this diagonal trend line which has shown that BTC has outperformed the S&P 500 for 3 years straight. This index too, just as BTC mentioned at the beginning of this stream, had a weekly and 2-week bearish divergence, which marked its local, potentially even macro top. Now, the thing is that the next FOMC meeting is important because it will influence, as I said, the S&P 500, the dollar, and the VIX index, and BTC ETF flows follow stocks closely. So when the S&P is strong, we see more moderate inflows into BTC, nothing record-breaking, but moderate inflows, while when the S&P 500 weakens, we see heavy BTC ETF outflows. So BTC is rather stable during strong equities, but drops sharply when stocks pull back. And therefore, the performance of stock markets is still the main driver of BTC in this current macro environment. And BTC will continue to show relative weakness against stock markets for a few more months, I think, until we see some macro support levels being reached, which you can see in the chart here as well. Potentially followed by a weekly or 2-week bullish divergence, which we had for the last time in November 2022. We had a weekly bullish divergence, which we can see through the WoodsBot as well, right? And recently we did have a weekly and / 2-weekly bearish divergence. So it is a very good indicator to mark the macro or the cycle bottom and top of this index. Historically speaking, it's been always a good time to be investing in BTC against the S&P 500 at bottoms for this index, and it's been better to decrease exposure towards BTC or other cryptocurrencies when we have seen top signals for this index. I don't think that BTC will keep on underperforming against the S&P 500 forever. But in the next few weeks and months, I could see this trend continuing lower, potentially because we are at a bearish retest area here as well. And if this aligns with BTC retesting that 100K zone, I think it's an additional confluence to take profits on longs, potentially even flip short on cryptocurrencies.
So I think it's super relevant to utilize an index like this. And you put this one on my radar, coincidentally enough, a few days ago, and I saw you talking about it. I really like the confluence of this because you really don't have to overcomplicate this. You don't have to look at all the stock market charts. You don't have to look at every ticker known to man, whatever the case may be. You could just look at this relative to BTC, and you'll be able to see the weakness just like you do ETH to BTC or a pairing like that, right? And that's why I like this one the most. I think it's a good indicator, especially if you're utilizing that on the higher time frame. The importance of that is to not overcomplicate the lower time frame. So how do you deal with lower time frame intraday movements and stay so patient throughout?
That's a good question. I think the lower time frame strategy of mine does not significantly differ from the higher time frame. So on lower time frames, I also look at support and resistance zones and divergences. But instead of looking at the weekly or 3-day or a daily divergence, I look at more lower time frame divergences, such as a 30-minute or 50-minute or 1 hour, right? These are more relevant to capture intraday, intra-week movements. But it's also important that you have a higher time frame plan, right? But it's relevant to not confuse that higher time frame plan with your lower time frame bias. Because you can, for instance, be higher time frame bearish, but that doesn't mean that you cannot long in between, right? For instance, we turned macro bearish on BTC at 125 to 126K. We rode that bias down to 80K, and we believe that BTC might still reach lower levels next year, but that doesn't mean that we cannot long BTC from 80K towards 93K, or if it reclaims yearly open to long it from 94K towards 100K, right? So it's very important to make a clear differentiation between your macro bias and lower time frame bias. And basically the strategy overall doesn't change much. Everything you see here, I use on lower time frames as well. I might not use the BTC to SPX chart because this is more for higher time frame navigation to tell me what is going to show more strength or more weakness in the next few weeks and months, right? But the indexes, the tools, the indicators that I use here, speaking of divergences, speaking of support resistance, using the simple moving average, POC levels, OBV, that's also what I use on more lower time frames, right? So I like to use bearish divergences on the RSI and OBV to take short positions. I like to use bullish divergences on the RSI and OBV to take long positions, and especially if that happens around support and resistance zones. What is very important to my system personally is that whatever I try to long and short, I have to have confluence from BTC, even if I'm not trading BTC. If I have a 15-minute divergence on hype, but I don't have a local bottom signal on BTC, I'm personally not longing hype because I need to be assured that BTC is bottoming before everything else can find a bottom, right? And that's the same with trying to short stuff. I can have a 15-minute bearish divergence on hype, but if BTC is not giving me local top signals, I don't feel intrigued to take that short positions, right? So yeah, that's basically it. In a very simple term, obviously there are more confluences that I can use, more indexes. I like to use indexes such as USDT dominance, for example. It's one of my favorite confluences on the market on lower time frames as well as on higher time frames. And there are also other indexes depending on what I'm trading. If I'm trading altcoins, for example, I like to use others, right, which includes the top 125 cryptocurrencies excluding the top 10, right? Or you may have heard, of course, of BTC dominance. There's one thing that is called others dominance, right? Which basically shows you when altcoins can have a period of strength or when they can have a period of weakness. And here, for example, we turned again macro bearish on altcoins, to be more specifically on the relative strength on altcoins, where we had this bearish retest right here. So when we are at such a resistance zone, it gives me an information that it might be more relevant to short altcoins instead of shorting BTC, right? So this is pretty much it. Obviously, nobody needs to use all these indexes. It is okay to just find one index and learn it perfectly, learn how it moves, understand the key levels and key triggers that lead to reversals, and use that as a confluence to your setups, both on higher time frames as well as on lower time frames, right? Same story here. For example, on higher time frames, I've been looking at the others index, for instance, on the monthly time frame. And to me, it doesn't look very nice, if I'm honest, because we did have a monthly bearish divergence in December 2024. We made a lower high in September/October 2025 in the recent pump, right? And we have seen this compressing triangle on the monthly, and we basically have a breakdown of the zone right now. So this basically tells me one key thing, that any pop on altcoins, which is still possible because every downtrend in the market still has relief rallies, right, which can lead to 20, 30, 40% pops on altcoins, is for taking profits or positioning short. So I will be looking at, let's say, a bearish retest maybe at around 230, or if we get a retest of this trend line here at around 250, 260, to be positioning short. Why is this important? Because people often ignore higher time frame structures, higher time frame trends in the market, and assume that every pop in the market will lead to new all-time highs, right? And that's not always the case. And if you long stuff, let's say the support zone for this index, you know exactly when you have to take profits, or potentially when you can even allocate these profits into short positions, right? So this is a really, really good index to when you're trading altcoins. Specifically mid caps. You can use other indexes as well. You do that as well with total 2, total 3, depending on what you use. But I think what is important, apart from BTC and all these indicators, is that depending on what you trade, you find one specific index that suits your style, be that USDT dominance, total 3, total 2, total, or others. It doesn't really matter. And use that for your advantage, both for macro navigation as well as lower time frame navigation through the market.
Yeah, no, there's so many different confluences you can utilize in this market. There's other things that people can look at to not skew their vision, and a lot of it happens on the lower time frame because these macro moves take so much time to play out. The main thing that I see you do is be consistent throughout your strategy, and I think that's what's super important. It's super transparent. You do it all at Wealth Group, and I just wanted to bring that platform to everybody's eyes because of the importance in looking at things in the macro time frame. A lot of people don't like to do this every day. It's very slow every day to look at the macro time frame like this. And, you get impatient sometimes when you look intraday. And I think this is super important to look at. And that's why I find your analysis super interesting and super important. And just the way that you're consistent with it, looking at it every day, taking everything into account before you make your next moves. Tell me your thoughts on BTC. Tell me your thoughts on Ethereum. I'll bounce some thoughts that I have with you. We don't got to go super in depth, but I want to give the people something. I know I gave my analysis yesterday, so you guys saw in the last video that I posted yesterday exactly what I thought. But let's hear what DB has to say. Let's see what he thinks intraday, see what he thinks on the higher time frame.
All right, so I personally have two main plans for BTC moving forward on higher time frames. I think everything happening below yearly open is a chop zone. You can certainly scalp BTC on lower time frame divergences, and we did have a 15-minute bearish divergence earlier today from where BTC pulled back. Obviously, if you look at the weekly time frame, you won't notice it, right? But for lower time frame operations, you can always use these lower time frame confluences to short or long BTC. I personally think that 94 is a local resistance for BTC on lower time frames because that's also yearly open. And then on lower time frames, we have a support zone at around 88 to 87, potentially even 86K for BTC. So that's a very tight range where BTC is currently trading in. And on more higher time frames, I have two clear plans. What I'm looking at, as I said earlier, we could potentially squeeze towards 100K where we test this potential new trend on BTC, where we have the simple moving average, where we have an area where BTC, in my view, completed a market structure break, and where we have a bearish retest of this RSI level on the weekly, which has been lost during the recent drop on BTC, right? So if we get here towards 100K, it doesn't have to be 100K per se, it can be a bit higher. 102K is exactly where we have the simple moving average. I will be looking for lower time frame confluences that support my thesis that this is a bearish retest. Let me just put this into perspective. If we reverse this chart, this would be a very good looking coin that you would want to long, right? We have a very, very long trend, downtrend in this case. If it's inverse, you have a breakout from the zone after a weekly bullish divergence, and you have a retest of the zone, right? So here it is where you're testing this new trend. So basically, if I see some lower time frame bearish divergences, say the 4-hour, maybe even 12-hour at this area, I'm going to assume that we will reject from the zone, and then we will wait a few weeks and see if we are printing a lower high on the weekly time frame. And if that's the case, it's the first lower high on the weekly for BTC that we have seen throughout this cycle, give or take, right? So as long as this area is not reclaimed, I think the trend could remain down. If we reclaim the zone, we have reasons to speculate on a new all-time high. But as long as that is not the case, to me, this is a relief rally towards a bearish retest. Now, if we don't get that instantly, let's zoom in a bit and we will see something very, very interesting. So during the recent drop, BTC went to an oversold area up to the 3-day time frame. And why this is important is because first it tells you BTC has been heavily oversold, so it doesn't really make much sense to be higher time frame bearish or mid-term bearish, right? And in addition to that, it could form what I consider a very, very strong bottoming signal, which would be a 3-day bullish divergence. If we look at historical data, and if you look at any dip or correction that we have seen throughout the cycle on BTC, you notice that there's one common thing, that you have some form of higher time frame divergence on BTC at every local/macro bottom or local/macro local top, right? We don't have that currently. The good thing is though, we can still form it. So if BTC was to drop below 86K, it would already start printing that 3-day bullish divergence. The thing is though, that this bullish divergence could form down to potentially 78, 77, and 76K. So it is a 10K zone that you would need to DCA into, right? So that's a pretty big zone, right? And that could mess up with your setup.
To add on to that, we might not even hold exactly as planned too, right? Like we see a lot of these logical type of play and top of the range order blocks sort of just capitulate straight through, take out stops, and then come right back to entries at the end of the day. So we could see a potential flash wick down even further than where you anticipate. Yeah, that's kind of what I've seen occur lately. You know, I've seen that occur, especially it was an eye opener when it happened in October, right? That 10-10 wick was insane. We haven't seen something like that in forever, it seems like. And I think that the way that you view the higher time frame and evaluate past price action in general, and this is for anybody, is going to always dictate the future. Maybe not exactly, but past price action tends to repeat itself, and it's important to realize what happened in the past to then make your educated guess on the future.
If I may add something on top of this, so as I said, a 10K range where the 3-day bullish divergence could form is very wide, right? So when you have to DCA into such a big range, your risk is not properly managed, right? Because the RR is messed up, etc. I have one piece of advice I can give to people who are trying to accumulate BTC or add exposure towards BTC based on a 3-day bullish divergence, and that is that you can, within the 3-day bullish divergence, always identify some lower time frame divergences as well, say a 4-hour or a 2-hour or a 1-hour divergence within the 3-day that helps you get a more precise entry, especially if it happens at POC levels or lower time frame support levels. Let me give you a very good example. So this is very important. So if you're dealing with a higher time frame divergence, as I said, you have to DCA a very big zone, right? In 2021, you had a weekly bullish divergence on BTC, but that happened after a 75% drop. So if you accumulate spot here, you're safer and you can accumulate more comfortably, right? We're still relatively high on the greater scheme of things. So let's say you accumulate on a 3-day bullish divergence and you have to DCA into a 10K zone, you know, and then the RR is just not there, not supported. So what you can do, for example, I did in 2021, is that I've noticed the weekly bullish divergence. So I understood based on the weekly bullish divergence on BTC and DXY being at those range highs, for instance, and other confluences, that we are at levels where BTC can potentially bottom, right? But the thing is that we did have a bullish divergence at 18.6K. We did have a bullish divergence at 15.5K, right? That's a pretty big zone, right? But as I said, you can zoom in to the chart, in this case on the daily or the 12-hour even. I believe even on the 12-hour we had some signals. And what we basically had is that we had a 12-hour bullish divergence within that weekly divergence, right? Right here. So we did have the sweep of basically cycle lows, 15,540. And then we did have another sweep, which basically completed the 12-hour bullish divergence, right? So you don't have to necessarily look at that weekly divergence to identify an entry zone, but you can make it more precise via more lower time frame divergence. And here as well, if we get that 3-day for BTC, we didn't have a 3-day bullish divergence. If it forms, it's not guaranteed to form, right? But it would be a very ideal scenario. It would be the first higher time frame divergence, in this case the 3-day, that forms from an oversold area on BTC. We had it a few times in April 2025, in August 2024, but this didn't happen at an oversold zone. So the last 3-day divergence on BTC from an oversold zone on the 3-day actually happened at cycle lows, or very, very close to cycle lows, right? So we are dealing with a potential strong buy signal. If you want to reduce the DCA range, as I said, within the 3-day, you can look for a more lower time frame bullish divergence, starting from the 1-hour and potentially going all the way up to the 4-hour and 12-hour. And that will help you not only get a more precise entry, but also a way easier invalidation, which in that case would basically be that divergence being invalidated. Because if you wait for a 3-day bullish divergence to be invalidated, BTC can literally drop. If you start buying at 86K, it can drop to 75K, and the 3-day may not be invalidated yet, right? But that's not a trade you want to enter when you buy at 86K and your stop loss is below 74K, because that's just too much risk to take, right? And if the stop loss hits, basically you lose more than you have anticipated or that you should, right? So always good to have some lower time frame confluences on top of this higher time frame confluence that is telling you that we might find a local bottom for BTC here or around these areas.
So I really like how you start off with top-down analysis. I preach the importance of making sure that you understand what's happening on the higher time frame and then lower the time frame down a bit. You're not skewing your vision. You're making sure you realize the landscape and the terrain of things, and it's a good habit to have. Yeah, so let's talk a little bit more about the lower time frame here, what you expect in the coming few days, weeks, into the new year. I know I spoke about a little bit here, so I want to touch up as you're drawing your levels here. I really like a sweep up towards the most recent highs at around that 93.5 to 94 level for shorts. I like a sweep down below towards the 86 to 85 level for longs. That being said, I do as well like the 88.7 for scalps. Let's say if we want to get an aggressive push down to an aggressive move up, maybe into FOMC, maybe to a rejection down into the 86, 85 level. All that's to be seen, and we haven't seen an FOMC meeting, I think, of this significance in quite some time. We don't really have much happening, to be honest, and I think a lot of traders, especially ones that trade with significant capital and look for significant moves, are really waiting for this FOMC, and you touched up on that in the beginning. And we are also approaching the end of the year. We're approaching holiday season. We're in a liquid territory right now. And that's why we're chopping around so much. We just saw yesterday on a Sunday, we had 2K move down, have a 4K move up, to have another 2K down move, to then a 2K move up today, and so on and so forth. So how do you see the lower time frame playing out?
Yeah, I have a very, very similar plan to you as well. So regarding Sunday price action is always a bit tricky. I don't really like to trade on Sundays because volume is so low. So you can have literally one whale offloading his or her BTC, right? And then you can get a 2K drop, which fills a lot of orders that are already placed, and that's why you get these moves in a market basically which has very low liquidity, right? So the probability of a scam move happening on Sundays is therefore higher, and I don't really like to play with that personally, but it's a personal thing. In terms of lower time frame bias towards BTC, honestly, my bias doesn't differ much from yours. We have very clear resistance areas below yearly open at 94 to 93. Okay, right? We did test that zone multiple times. So personally, the closer we get to this level, the less I'm interested in new long exposure. I would be interested if we were to reclaim this zone, have some acceptance above this area, a few, let's say, 4-hour closes above it, and then we get some form of retest at 94. I think that would make the invalidation for a new longs very easy, and then we can literally shoot for that area close to 100K, and then we could look for some bearish divergences once we get there. On the other hand, I would be interested on a sweep of 88, 87, and if I get some lower time frame divergences, would be looking for some longs as well. But I also cannot ignore the fact that we are trying to form some form of bear flag here as well, which is something I have at the back of my mind. So wouldn't be surprised if this area doesn't hold around 88. We could actually go all the way down to what you mentioned as well at 86, 85, right? And then we would look for some lower time frame triggers here as well. But here in between, honestly, not really interested in taking positions at all. Would either be interested in shorting this area here or long on a retest, or look for some lower time frame confluences if we sweep into these two zones here. ETH, we turned higher time frame bearish on ETH around this area here, mid-October, when we lost this uptrend. It's literally just a diagonal trend line, but we did have confluence from other indexes, from BTC, and these higher time frame bearish divergences. We should not forget that all indexes that we follow from total to total 3 have monthly bearish divergences, right? So these are not signals that you simply ignore. They suggest that price has moved quite a lot in recent months and years, and you only get monthly bearish divergences close to local, even macro tops, right? So that was an additional confluence to us turning higher time frame bearish on ETH, it reached our breakdown target at 2,800, 2,700, which to me is support. I do think that if we get that retest for BTC at 100K, ETH will outperform BTC. If you look on the daily, we see that we had basically a downtrend which we are trying to reclaim here. It's not perfect, but it's still good confluence. And if we get that push from BTC, I think it is possible that we get another bearish retest at the 3,700, 3,800 zone, which for me would be for taking profits or for positioning short on higher time frames. And then the next support, if we were to lose 2,700, 2,600, as I said before, would be 2,100 towards 1,950, give or take. But obviously that's a level that's significantly lower from current prices, and that would also require BTC to make new lows as well. But just considering these three bigger levels that I'm currently looking at for Ethereum and everything in between, it's basically to confuse you from this higher time frame move that could happen potentially towards this area here.
So I'm looking for the 3060 to 3026 level. That's what I'm looking for if we do get a sweep down from here. I think that if we do close above the 3147, 3150 level, which has been a little bit of lower time frame resistance, we don't have a 4-hour closure over this level as well. So I want to see us do that and then maybe start to target 3256 level, maybe on some lower time frame triggers for a flip back above, or a deviation above that 3150 level for a flip back down to that 3026, 3060 level. And I even think 3960s, 39, if we float there in the next couple of days, is worth a bid, maybe to flick back up to that 32 level. And if we do sweep up there, I could see us potentially SFPing in line with that 93, 94 level. So it's all dependent on what BTC wants to do and how alts want to react from that point. ETH is showing relative strength to BTC today, but we have not seen anything as of yet. We're very choppy in New York today. I hope you guys enjoyed today's video. I appreciate you, DB, for hopping on, and we're going to make this a reoccurring thing. So look forward to his content in the future. I'm going to leave all his links down below. Make sure you give him a follow on Twitter. And if you're at Wealth Group, you already know. Make sure to check him out.
Thank you for having me on your stream. It's really a pleasure to discuss the market with you on both higher time frames and lower time frames. Make sure to follow us on Wealth Group and on Twitter as well. And follow the channel because we will keep posting more content in the next few days and weeks whenever we see something interesting happening on the macro side of things.
Thank you again, my brother.